Fourth quarter and full year results for 2024 from FTSE 100 index members BP on Tuesday the 11th, Barrett Redrow on the 12th, and British American Tobacco, Relics and Unilever on the 13th all mean there will be much for investors to ponder as they prepare for a deluge of corporate reports in the next few weeks. Even allowing for that august list of names though, the companies that are most likely to stir the headline writers in the coming week are Barclays and Natwest. The big banks report on the 13th and 14th of February respectively, the latter on Valentine's Day no less. Their UK high street rival Lloyds will publish its figures on Monday the 17th by the way, with the Asia-centric lenders HSBC and Standard Chartered following up on Friday the 21st of February. You might not believe this given the uncertain economic backdrop, but the FTSE 350 Banks Index is up by almost 50% in the past year. That leaves it ranked second out of the 39 industrial sectors that make up the wider benchmark, behind only telecom equipment, and, perhaps more pertinently, at its highest level since 2008. Maybe the banks have served their long penance and have finally won over investors again. In capital terms, NatWest's actually the third best performer in the FTSE 100 over the past year, with a gain of more than 90%. Barclays ranks 4th, Standard Chartered 6th and Lloyds 12th. HSBC, by the way, ranks 23rd after a still healthy 1/3 share price advance. Remember, those figures cover capital gains only. All 5 banks are paying dividends and all 5 are running share buyback schemes, as we shall see later on. As we head into these fourth quarter results, analysts seem fairly cautious because aggregate pre-tax profits across the big 5 are seen as rising 3% year on year across the whole of 2024, and then dipping slightly again in 2025 to around the £48 billion mark, although those totals expected easily exceed the pre-financial crisis total of £36 billion from 2007. That may explain why the shares are at their high since 2008. Now the themes and numbers to watch will be the same across Barclays and NatWest, namely loan and deposit growth, the trend in net interest margin, the trend in loan losses and asset impairments, any litigation and conduct costs, and cash returns to investors. Now deposits were down slightly at both Barclays and NatWest in the third quarter, although NatWest did show its 9th consecutive quarter of loan growth. Helped by high interest rates staying higher for longer, net interest margins were strong throughout 2024 and actually started to grow again. That should please shareholders, though consumers and regulators may be a little bit less excited. One question is whether high interest rates will lead to higher loan and asset impairments, although there's little sign of that yet. Impairment ratios, the percentage of total loans written down as sour, well, they were still pretty modest in Q3, at 0.25% at NatWest and just 0.37% at Barclays. Litigation and conduct costs have also been modest so far in 2024, but analyst investors will be on the lookout here for any comments on the car financing market. The government has sought to intervene to cap any fines and charges, but the Supreme Court will sit in judgment here in early April. This, however, may be more of an issue for Lloyds than either Barclays or NatWest. Barclays' much discussed investment bank will also be scrutinised, given the historic volatility of its earnings and the current relative dearth of initial public offerings in London, even though global stock markets are generally looking perky. By way of a benchmark, the unit earned £892 million in pre-tax income in the third quarter of 2024, and it actually made a loss in the final 3 months of 2023, generally when the bonuses are declared. All of those numbers will help shape headline pre-tax profits, where the consensus estimates are as follows for the whole of 2024. £8.1 billion at Barclays against £6.6 billion, and £6.1 billion at NatWest versus £6.2 billion in 2023. Finally, attention will switch to cash returns. Barclays is forecast to declare a total dividend for 2024 of 8.6p a share. Add that to £1.8 billion in buybacks for a total cash return of £3 billion last year, or 7% of its stock market capitalisation. And a forecast dividend for NatWest of just over 19p a share gives a total cash return of £4.8 billion when added to its already completed buybacks, or 14% of its market cap. The government stake's now down to just 10%, and analysts see NatWest buying back more of this in 2025. I hope that you and your families are all keeping well. Thank you for watching, and I look forward to seeing you again next time.